following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day out there?
I'm having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day, as we kick off this 2014 in the past, 2015 coming into the future. Wish everyone a healthy, happy, great new year. We're going to have a special show out here today for the next hour. I'm going to run through not only the indices, some of these sectors, as to see what I think we're going to be looking at next year. But first off, let's take a look at one of our quotes by Walter Anderson. Believe in something big. Your life is worth a noble motive. That's a fact, folks, okay? Yesterday's gone. Tomorrow's not here. What are you doing right now? What are you doing in 2015? Make it a big one, folks. Okay, where are we going to start? I think the place to start, folks, is King Dollar. King Dollar, that's all you hear everywhere today, last couple of months. King Dollar's going to the moon, has gone to the moon, all of the above. King Dollar, folks, if we take a look at it, we're going to bisect and dissect this right from 2002. Why 2002? Because what you had out here is this. Is that in 2002, King Dollar was out there at 120. Bottom line, that's when we got into the gold market. That's when gold was $282. King Dollar went from 120 down to 71. 71 was the low that was established in 2008. At 2008, bottom line, people thought the King Dollar was going to go dramatically lower on a continual basis. What ended up happening in the financial debacle, King Dollar rockets topside, gets up to the 89 area. Thus far, what you do have is this, is that King Dollar has been building cause from 2008 for a higher price. King Dollar right now is at 90.61. The swing point that is from 2005 is 92.50. Now, I expect what you're going to see is that King Dollar is going to get hit at that level. It wants to test that level. That being said, what you have is this. You have if we take a look at the first leg on the low of $72 in 2011, we went from $72.80 up to a price point of $84. So you went up 12 bucks, okay? That level, then we came down to a price point of 78. Well, the A to B equals C to D basically brings you into the 91 area. So you've done a couple different things. You've done the full move A to B equals C to D. You've come into the swing point from 2008, 9, and 10. You are going after the swing point of 2005. Now, I expect that swing point is going to get hit. That being said and done, however, that is going to be the end of the move on the U.S. dollar for probably 6, 7, 8 months. What is the confirmation on that? Well, first off, when you get a pullback, if in fact we pull back with dramatically lighter volume and the King Dollar can only go to 86 on a pullback, that's saying that, guess what? It will make the run once again. I don't expect that to happen. What I expect you're going to see is this. You're going to see King Dollar pull back. You're going to have an expansion of volume on the pullback, and King Dollar is going to have a larger correction. And the way currencies trade, folks, okay, is that currencies can trend for long periods of time. Now, that's King Dollar. Let's go over to the euro, because the direct correlation, when I'm talking about King Dollar, I'm talking about the index, and 60% of that index is the euro. Okay, so the euro has gone down straight for 8 months. If we take a look at the characteristic of the euro had a high out here of 138 in May, 139 actually, straight down to a price point of 121. Now, that type of move, flat out, is fast, furious, all of the above. No two ways about that. And what you have is this, is that when you go back to 2012, July of 2012, the euro has a swing point of 124.3. We have hit 120.98, and the day that we actually hit this is the 31st today, which I'm doing this program today so that you can listen to it tonight, listen to it over the weekend. That also, folks, is 100% move for move. So on a technical basis, it absolutely makes sense that King dollar is going to pull back. The euro is going to bounce because we haven't had a bounce in the whole deal. Okay, that's technically. Fundamentally, okay, so I'll stay with the technicals for a second. Now, we're going to switch gears, and I'm going to go over to the gold contract. The reason I want to go over to the gold contract is this. As King dollar has been making new highs almost every week, the gold contract came into a low on November 7th. November 7th, the gold contract got to 1130 and then came off 1130 with force. We went from 1130 to 1179 with conviction. Conviction, folks, is wide price spread accelerated volume. Great move. Huge move. That move there did two different things. What it did is it broke the downtrend that had been in place for quite a while. Specifically, it broke the downtrend that is saying that gold now wants to go to 1346. Since November 7th, we've had 5 separate signs of strength on the way up. And the sign of strength on the way up is wide price spread, accelerated volume on the way up. Then your confirmation of that is that you back down, and you back down with lighter volume. Okay, we've got all of the above. On December 30th, we got another sign of strength. That was the 5th sign of strength. We went topside with 142,000 contracts. You go from 1180 to 1210. December 31st, we're down $13. Guess what? You're down with 51,000 contracts. Folks, that's a beautiful thing. This thing is set up a small ABC structure on the way up. I expect what you're going to see right at the beginning of the year when we're talking about January 4th, 5th, 6th, 7th, 8th. Gold's going to make a run for this 1238 area. If we get the volume at 1238, what you're going to see is that gold will be up to the 1285 area very quickly. Now, that correlation, meaning dollar strength, dollar weakness, gold strength. And here's the divergence. The divergence is that gold has not got smacked when the dollar is up at these highs. That's telling me that that's the end of the move higher for the dollar at this particular point. What we don't know yet, but we will get a good clue on very quickly coming into the beginning of the year, is that what is the volume as we back down on the dollar? And as I said a little bit earlier, if you back down with lighter volume, we'll make another run for it. If you back down with heavier volume, that's a much larger correction, and that would give the metal market a much more room to breathe to get into higher price. Now, there's another part of this, and this is the really cool part. So check this out. The correlation inside commodities in general, oil and gold, is that they like to move together. Well, they really don't like to move together, okay? You know, they have moved together in the past. Bottom line, and this is where this is really wild. Oil, folks, has gone down from $105 straight down to 6 months to $52.88. If we take a look at the correlation here, now this is where the divergence is going to also come in, and this is going to, I suspect, is going to be a shocker period in the dollar move and the oil move. Oil right now on a continuous contract is trading into the top of the bar from 2008. What that sets up, and we're into that pretty good. The top of that bar, folks, is $54.62. The bottom of that bar, and it's a high-volume bar, is $32.40. That's where oil wants to go. That's going to be a shocker beyond belief, okay? People are in shock that oil right now is trading at $52, never mind which I think is going to be $32. Now, that move also is going to be fast and furious. We've already done a move that's extraordinary. But guess what? You're in the middle of nowhere right now on a technical basis in the oil market. It's not like, you know, when you're talking about floors, there's no floor here, okay? When oil had gone down in 2007, 2008, we went from a price point of $147 straight down into 32. Bottom line, you're going to see this down into the 32 area. So in that whole aspect, 2015, lower dollar, lower oil, higher gold. You stay right there, folks. We're going to be coming right back. This is Tom O'Brien. This is TFNN. Hope everyone's having a great, healthy, happy New Year. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. This is Tom O'Brien of TFNN. We do appreciate you growling and prowling with us out here, folks, and we do want to thank each and every one of you for listening each and every day. We would not be broadcasting without you, and we want to say a big thank you. I want to say thank you to my whole staff, all the producers, my son for running this company, of course, all the talk hosts, and all the listeners, of course. Now, let's go into the bond market. The bond market, folks, okay, is a market that on a continual basis, meaning the last 4 to 5 years, folks have thought that the rates were going to go up. Coming into 2015, the Fed has told everyone that the QE is ending, and they thought that within the second half of the year, when the time was right, that they would raise rates. Well, let's bisect and dissect that market. So if we take a look at the 30-year bond, and thus far, folks, the 30-year bond has not only been leading the bond market, it's leading it in an extraordinary way. If we pull the 30-year and we take a look at this on a technical basis first, what you have is this. If I bring this back, I'm going to bring this back 15 years. And what you're going to see is that, well, first off, no, I'm going to bring it all the way back so you can see the type of bull market the bond market has been in. The bond market, folks, okay, since 1981 has been in a bull market, you know, and you've heard many, many times that you can't make money in bonds. Well, guess what? The bond market is the biggest bull market I've ever seen in my life. That's the bottom line. What do we have out here right now? Right now, you're at 144.15. That's the price of a bond, of a $100 bond, by the way, okay? And when, okay, so where are we going with this? The swing high in bonds was 153.11, and that was in September of 2012. Bonds have continued to reject lower price with lighter volume on a continual basis. So what does that set up? Well, first off, what it sets up is this. You set up a test of the high, because we're already into that bar. The bottom of the high bar, folks, is 144.05. We're trading 144.16. And just as when I was talking about the oil market, how once you're into the bar, it's going to go to the top and the bottom of the bar. In this case, it wants to go to the top of the bar. Now, as we get to the top of the bar, does it take it out with volume or not? Well, we don't know that until we get there. Bottom line, we're going to get there. When we get up there, I do expect that we're going to take it out with volume. Why? Because what has happened is this. When we came down from the highs of 2012, we went from 153 and we came down to 127. Well, 127, folks, okay, wasn't even where the breakout occurred. It was 122 that the breakout occurred in September of 2011. So what that sets up, number one, is that you can get into the bar, you can take the bar out, and you can do it with volume. Now, that's technically. Fundamentally, let's walk through this. So fundamentally what you have is this. Our 10-year right now, the Treasury Department are paying folks that want to buy a 10-year bond 2.17%. Folks think, you know, many investors say that's very inexpensive interest rate. Folks, that is a huge interest rate in the context of what the competition is. And everything in the investment model, in the investment business is, what is the competition? You know, you have large sovereign funds, you have large colleges, you have large pension funds. They have to put money to work. Now, inside their own charters, what ends up happening is this. They can't own all stocks, okay? You've heard this a million times, okay? You know, you have a portfolio and a diversified portfolio. These large institutions flat out have rules that have to be in place. End of story. In that context, they have a choice. And right now, as we walk through this choice on a fundamental basis, their choice is, do we go into the Treasury market and get 2.17%, the United States Treasury market, or do we go to Canada and get 1.7? Maybe we go to the United Kingdom and get 1.7. We can give money to France and get 0.7%. We can go to Germany and get 0.5%. We can go to Italy and get 1.8%, or Spain at 1.5. Now, Spain and Italy are just about broke. So you can see the context that we're talking about here. We have a higher rate than all of those countries. Anyone that put money into the bond market this year, any sovereign other country or any corporation outside of the United States made a huge amount of money. The reason they made even bigger money was what? Was that you had the interest rate that was paying more than anyone else. Then what you had is that the dollar went higher, and then they had the currency expansion also. So they got it both ways. Now, if we move backward about 5, 6, 7 years ago, what was the mantra then? The mantra then was that if, in fact, the Chinese stop buying bonds, or they think that we're going to default, the United States would fall apart, our bond market would fall apart. What has factually happened? What factually has happened is that not only China is buying more bonds, Japan actually beat them a couple times in the past year of buying so many bonds. Now, the Japan move was so smart, it was incredible, because Abe, from the Prime Minister of Japan, bottom line, was saying that, guess what? They are going to take the yen, and they're going to weaken the yen, hoping for inflation. This is public information, okay? So if we go over and we take a look at the yen, when the Japanese made this move, they were so smart, it's amazing. What they did, as they were making the move, okay, so the yen bottomed in December of 2011. That bottomed out at 75. Right now, you're at 119. The yen, you know, it wants to go to 146 on a short-term basis. What Japan did when that was happening, they piled into our bonds market. Smart beyond belief. Why? Because what happens is that, of course, they're getting a higher interest rate, and they're taking their currency that they're going to weaken, they're putting it in a stronger currency, and you can understand what happens there. It's momentum that is amazing. Okay. Now, that's just two large countries that are buying our debt. What also happened in 2014? What also happened in 2014 is that our deficit is going down. So what does that mean? That means that less bonds are being issued by the United States Treasury. Yes, this is a surprise to everyone, okay? You know, you go back 3 years, our deficit is supposed to be going up on a continual basis. Well, guess what? It's going down, and it has been going down very quickly. I suspect what we're going to have here, because of the amount of taxes that are going to get paid, specifically because the economy is doing better, what does that mean? It's going to get down more. What does that do? That brings the supply of bonds lower. It brings the demand higher because of the fact that they have a choice. Do you want 2.1%, or do you want to go to Germany and get 0.5%? This is Tom O'Brien. This is TFNN. You stay right there, folks. And don't forget, at TFNN, as you're kicking off 2015, every trading day, we do 10 hours of live programming. You can get it right on your cell phone. TFNN.mobi gets to the audio. If you want the TV, TFNN.com. Hit the TV on the right-hand side. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Hope everyone's having a great day, a safe day, and let's make a 2015 a great one. And you know, when I read that card to start off the hour, folks, that card was believe in something big. Your life is worth a noble motive. Bottom line, wrap your head around that, folks, okay? Because as I say many times, yesterday's gone, tomorrow's not here. What are you doing right now? Keep that at the top of your head as you are living each and every day. Because you know what? You can make anything and everything happen that you actually want. Not sure how that works on a physical and spiritual and mental basis, but it works, okay? We're more powerful than we realize. Get it in your head, send it through your body, send it out to the universe, and guess what? Bingo. Here it comes. Okay, So we went through the dollar, oil, gold, bonds. What we're going to do now is we're going to go right into the NASDAQ 100. Why the NASDAQ 100? Well, we're going to do a few of these indices right now. So I'm going to use the 3 Qs for the NASDAQ 100. And if we take a look at it, the 3 Qs right now are trading at 104.15. If we bring this back, okay, and the NASDAQ 100 itself, has been charging forward to the 2000 highs. So this is the 2000 highs in the NASDAQ 100, folks, are 120.017. And up at those highs, now if you want to hear something that's really bizarre, this is pretty wild, okay? So those highs, of course, get generated in 2000. The volume at that high is 721 billion shares. The amazing part, now this really blows my mind, because if you take and look at any other indices, when you actually go back that far, you don't have volume at those indices. Meaning, when you go back 15 years, as markets have matured and got older, there's more people in the world, there's more people trading, volumes normally continue to go up. Well, in the NASDAQ 100, what you're having is that we're coming into that high. The bottom of that high is 100.58. And we came into it, last month, and we came into it with 434 million versus 721. I mean billion. Million. No, million. Yes, million. What is that setting up? Bottom line, you know exactly what it sets up. It sets up 2 different things. You're testing with dramatically lighter volume. When we back down, what you'll see is that this is going to be a test of the low of the high, not the high. That's the way this seems to be shaken out at this particular point. The actual bar that we have tested is the September 2000 high. That's 103.08. So and I expect we will get back inside 103.08, what you're going to see is that you can't bust them up, you're going to try to bust them down. Okay, so that's the much longer term basis. And it is an absolute mind blower that it can't even get the volume, higher volume than that, because we're going back that far. Okay, so now if we bring it closer, that's the 15-year deal. Now we bring this closer, I'm going to put this on a 10-year deal. And what you're going to see on a 10-year deal is this, is that we came off the lows of 2008, fast, furious, 24 bucks, goes topside, first goes into the 2007 highs, and still has some good volume behind it. The last time that we had good volume inside the NDX 100 is at $58.57. That's pretty intense. That's the first one. That's the heads up. That's the last price with price and volume. And that's saying, guess what? That means you can go back to $58.58, which would be a mind blow. That'd be a 40% retracement, just so you understand how that shakes out. Then what do? It doesn't stop. We were up at the $58. You had a retracement back to 49. You go topside in 2012. You go sideways from $68 to 61. You finish out the year at 68. So, at the beginning of 2013 to right now, so you had all of 2013, all of 2014, you almost didn't have a retracement. You went straight. It's a straight line move. Inside that straight line move, however, what you have is you have 2 different heavy signals that you're going to back down. And what it is this. When we backed down in April of 2014, you had a high up here of $91. You did that with 810 million. You came down with 1.1 billion to 83 in a heartbeat. So you come down like $7 in a heartbeat. Guess what? Rejects lower price again, decides to go topside, and here's the big one. The big one was in October of this year. You went from 101 to 90 in a heartbeat. That's a 10% downdraft. Okay, so now where do we stand right now? Where you stand right now, and we bring it even closer, is this. Coming into the market the last week of December, the actual high of the NDX 100 was generated on November 28th. That high was 106.25. Market couldn't make it, and that was light volume. So that up there, we had 17 million shares, Market goes from a price point of 106 down to 99. Monster volume. Rejects lower price, goes topside again with 17 million. So that we went from $99 back up to 105, no volume. As we are ending the year, which is just a total mind blower, is that you actually got a little more volume on December 30th, which is just bizarre because the last week of trading, you know, everyone's on vacation. So what do I see coming in right at the new year? First off, what you're going to go after, the Index 100 will go after the swing point of December 16th, which is $99.96. Then what is wide open that has not been tested yet is the October 15th swing low. That October 15th swing low is at 90.34. Now, that is on the dailies. When we put this up and we actually put this on a weekly basis, what you're going to see is this. On a weekly basis, you're going to see that we actually broke the uptrend. And the uptrend that we broke is pretty extensive. And all the market has actually done is this. Now, when we broke the uptrend, by the way, this uptrend was broken in April of 2014. You actually never got back inside the range. So what happens is this. When we came down from $91 in April to 86. But when you take time and you put time out with a channel line, what happens is that you can continue to go higher, but you're hitting the bottom of the channel. And that's exactly what we have done. That bottom of the channel, we've hit it twice. We've come off that bottom of the channel twice with a vicious volume. And if you happen to be listening to this in your car, folks, don't forget, this program is archived. You can go to Tiger TV. You can watch the whole program. No problem. Okay, so you can see exactly visually what we're talking about. So when we came down the first time, you came down on a weekly basis with 424 million shares. Rejects lower price again, and it goes higher, and it goes higher with 71 million. So you're down with 424 million. You go higher with 71. Does it stop? No. You come back down again with 299. You went higher the week of December 18th with 92 million. That setup there says two different things. The setup, first off, says that you're going to go down and you're going to test these lows from the October 15th level, which is 90, which is not that bad. It's 14% down. Well, if we get volume there, however, what you're going to have is that then the next leg down brings you to the April 14th leg. So now you're at 83. Technically, the way this is set up is that when you break a trend like this, long-term channel line trend, it's saying you're going to go back to that trend. And back to that trend is 68. So that's how this NDX 100 is set up at this particular point. And the 68 is June of 2013. That's how that is set up. Now, we're going to do the S&P. The SPY, the SPY, actually has, it's pretty intense. So let's do this. I'm going to use the SPY first so you can see the volume characteristic with it. When you take a look at the SPY, we have the same type of setup, except that the downtrend that was, the uptrend rather, that was broken is extensive. You're talking about a trend that has been in place since the lows of 2008. It does not have to go back to those lows, and I don't expect it will. What I do expect is this, is that we're at 207 right now, and it looks to me that the first place that is wide open is going to be 1570. That's a big number. That's 25% back. Why? Well, with the SPY, you have the same type of setup, meaning you've broken the trend. The difference with the SPY is that the SPY got back inside its trend upside, where the NASDAQ didn't. In order to come back down, which I expect we're going to see the first 2 weeks of January, is that the SPY would have to go to 204.91. Once you're inside that opens the whole thing up. You stay right there. We're going to finish bisecting and dissecting the SPY as soon as we come back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks, and I do want to wish everyone a healthy, happy 2015 as we kick off a great year coming at us. We're going through all the different markets out here today, what I'm expecting specifically in 2015. You know, we've done the gold market, the bonds, the dollar, the S&P, the NASDAQ 100. And what we're going to do right now is we're going to get our head wrapped around the small caps, the Russell 2000. So if we take a look at the Russell 2000, we're going to use the IWM so you can get the correlation inside the volume characteristic. The IWM right now is trading out at 120.60. Now, the small caps, folks, have had the hardest time getting to the highs. They made it. They are, as I'm doing this program, on the December 31st. They made it today. They got to 121.40. The high is 120.58. That characteristic, that high was generated in March of 2014. That's a huge amount of cause that no doubt it took to get up to these levels. However, what you have is this, and this is a classic, and this is on a technical basis, folks. These types of horizontal channels, very accurate, meaning probability-wise, but they take a very long time to set up. And what it is this, is that from January of 2014, so we have a full year of statistics as to does the market want to go higher or lower? And how is it pushing? Is it pushing with volume or light volume? So the way that you do this is that you take a look at the top horizontal, the top of the range versus the bottom of the range. And where the volume is pushing will tell you flat out, do we have buyers and or sellers in the market? Okay, so as we bisect and dissect this, what do you have is this. Your first downdraft, which was on February of 2014, the IWM was at 110. It had 315 million shares there. So you got to, as you're going through this, and don't forget the program's archived in case you're in your car. So we have 315 million at 107. Well, then it goes topside. It goes from 107 and goes all the way up to 120. It gets to 120. As it gets to 120, we have 270 million. So you can see there your forces downtown. But that's only the beginning of it. That doesn't tell us a lot right there. You know, on a short-term basis, it would be telling us that, hey, listen, yeah, it should go back down and test it. Well, what does it do? It goes from 120, which was in March of 2014, and then it comes all the way back down to 109. As it comes down to 109, what ends up happening? We do 320 million shares. So what happened there? You got to 109. The last low was 107. The volume was 315. We actually got an expansion volume of 320. So what happens now? Well, what happens is that you can't bust it down. You're going to go bust it up, right? Okay. What does it do? Bust it up. Goes from 109, goes all the way back up to 120, 97 to be exact. Now watch this. This is where it gets really cool. We get up to that level, and we do 146 million. So first time we hit 120, you did 270 million. Second time, 146 million. What does that tell you? That tells you, folks, okay, that it's huge distribution at highs. The forces downtown. You want a confirmation again? Okay, it can't handle it because what had happened in July of 2014 is that it was testing the highs that were generated in March of 14. Did it with lighter volume, right? So what ends up happening? You get a pullback. You go from 120 in the small caps, and we get down to 107.48. What do we do it with? This is really cool, and you have plenty of time to study this over the holidays. We get down to 103.54. We break the swing lows, and what do you think we do? We break them, folks, with almost 40% more volume. You hit a swing low, and we hit 103.54, and you did it with 432 million. Okay? I mean, it was, that's like 25% more volume. The first time we did it, 315 million. That's 33% more volume, yeah. So first time was 315 million. This time, second time was 320 million. This time, 437 million. What do? You go to 103, rejects lower price again, but, you know, never can bust it down, bust it up. Markets like to move. Bottom line, you go topside again. Now, this is where it really gets wild. We go topside, and we get into 119.48. Now, this is where this is subtle here, and this has it's not a nuance, but you really have to wrap your head around this. So we go up to the swing point. We don't hit the swing point, but you're going into the swing point with volume. So if you go into the swing point with volume, you know you're going to hit the swing point, right? We do 302 million shares. Now, that's a nice number in the context of the last two highs that were up there. We only did 120 million, okay? We do 302 million shares. We only get, though, to 119.48. Now, that's still less volume than on the way down, but it's much better volume than the last two times we were up there. But now watch what happens. And I've seen this dozens of times, and this is really wild. And I'll give you another correlation of how this shakes out. When we end up testing, we test with 99 million shares. But what we have to do, we have to add another day and a half inside of that because of the holidays. So we actually tested with like 130 million shares. That test, okay, is saying flat out that as soon as we come back to work, right after the holiday, what you're going to see is that the small caps are going to make another expansion on the way down and go after 103. That's how this is set up right now. All you need is a close, and it's just going to be amazing. The close, so mark this number down. It's 120.58. You get a close under 120.58. We're going to open up Monday morning after, or even Friday, after January 1st. That small cap is going to make a run down to those lower levels. Now, that's on the short-term basis. Longer term, what you have is set up inside the Russell 2000 is you came down with vicious volume into the 103 area, and I suspect the small caps want to actually come all the way back and trade into the 80 area. The 80 area would be quite a retracement. That's a 33% retracement. So it's a big number, and the small caps themselves have shown that when the selling is happening, it's not only fast and furious, but there's never enough room for market participants to get out of the market. And what I expect you're more than likely going to see out here as we step into 2015 is that you're going to see a failure that happened on December 31st. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you, folks. Grab it and have fun with it in 2015. It's a great adventure. Life's a mystery to be lived, not a problem to be solved. Have a great one. Have a safe one. Go get them, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
This is TFNN.